So, hello, and a massive hello to everybody. Hope everybody's having a great weekend wherever you are, whatever you may be doing. This is 50 Pips, rocking and rolling, 5th of April, 2020. No trade calls, recommendations, or responsible for our own stuff. We're here for educational purpose solely. So, what's going on as we go into this pre-Easter week? Now, basically, we do have stuff on deck. We've got RBA on Tuesday. We've got some the OPEC meetings on Thursday. We've got again unemployment numbers out of unemployment claims and CAD unemployment out on Thursday. But again, the focus is really going to be how the market behaves and what the news flow does, right? Now, in the context of what's going on, nothing huge has changed except that we're seeing some encouraging data out of the US and some of the European countries. So that is positive, right? We are still far from being out of the woods, but we can't guess what's going to happen. We're just going to have to let the data and price guide us, okay? Now, markets are taking a little bit of a breather with the indices stuck, around those 10-day moving averages, which is not a surprise, which is what we were expecting for those to be pivotal, right? And again, not surprising once we see VIX is off, those 80s and has come back down into the 40s, okay? Now, keep in mind that this does not mean just because, as our base expectation was that the VIX has put in a high, right, that we've topped for this cycle. I've seen a lot of less experienced people equate the fact that because the VIX has put in a swing high, that means the markets have bottomed. That's absolutely not the case, right? It just means the velocity of the panic or this liquidity squeeze or liquidity puke, whatever, has stalled here. But just because the VIX doesn't go back into those highs doesn't mean that the market can't go lower, right? We can still see the market grind lower, grind sideways, and grind lowers to new lows like it has happened in other times in the past, right? And also keep in mind that with the VIX still here around the 46, 40, 47, 46 mark, you should still be looking at this as implying basically still, around 3% daily moves from day high to day close. So it's not like we've gone from a situation where it's a snooze, right? You should still expect market to move and you should still expect volatility, right? As we said, our base case is after that fiscal and monetary actions have been voted and pushed through the system and slowly start to come into the system to stall that equity puke, which essentially has happened, right? Which was our base case. That panic low is in, and now we're stalling. We said the next things that have to be addressed are going to be the USD and then crude, right? We saw Fed tackling that USD recently with the foreign swap lines, and you see that it put in a short, it stabilized that USD, giving everything a little bit of breathing space. And then the other thing is Trump took care of crude, basically where what we saw on April 2nd on Thursday basically was the biggest intraday gain ever in the history of crude. Now, keep in mind that historically these huge daily gains for crude are not positive for stocks. Usually stocks still drift lower. But again, you see how all things being equal, things are really going according to plan. As first they stabilize stocks, then they tackle the dollar, then they tackle crude. Then see what happens. If things get worse, they're going to start tackling them all again. They'll probably go in and buy stock ETFs. They'll do something more like Plaza-like on the dollar. Then they'll do something more like tariffs or whatever they need to do on crude. So these are the three main things they'll keep on tackling until the problem is solved. Okay, so far, I think nobody should be very surprised. A couple of things which I think are interesting to keep in mind here going into this week and going into this month is USD JPY. USD JPY, it is not uncommon for us to put in some kind of a top in the first 10 days of April and then see it drift lower, as we also have Golden Week, which is into the 29th into May. So again, I think here another interesting play, especially this week into the end of this week, could be if we see any kind of strength, any kind of, oops, not what I want to do, any kind of rally here on yen, I would be looking for interesting price reversals to sell yen, for possibly to look for this to come right back down, maybe into this pivotal number again as we go back towards the end of the month. So this is the first thing which I think is particularly interesting. The other thing I want to briefly discuss is the euro, right? I do not believe, as we've heard people saying that the euro is going to die, that the eurozone is going to crumble apart. I think we've seen Germany has already shown signs that they will eventually cave. I do not think they're going to do Corona bonds. I think they'll find some way to make things work, kind of like all the other crises we've seen with Italy or with Greece, etc. They'll probably take it down to the wire, like to the last second, but something will be fixed. So the big question for me is not if the euro is going to stabilize and bounce, but where is it going to stabilize and bounce from? Okay, so there are a lot of different levels and different things you can look at. And if I remember correctly, last time we had that 0450, right, which was a key level. So I'm thinking here, are they going to basically hold it here again into this 108? And are we going to see this nice little bounce off the 108? Or are we going to see a lot more panic and we'll get another leg as the dollar retests those highs, as DXY retests those highs, euro pukes down to the 104, and that's going to be the long. So my base case would be to look for reversals to get long euro at 108, if not lower at the 104.50, okay? Now, another thing that a lot of people are wondering about or keep on discussing is what the hell is going to happen here on crude. Now, we discussed the longs on crude, and I think this is pretty much a no-brainer trade. Here it becomes a lot trickier. I think any kind of disappointment and gap down today, it should get bid. I would expect if you're looking to sell crude, you want to see them pump it up and keep it bid all the way until Thursday into this meeting, right? Any dip will likely be a buy, and then to settle out. I mean, stranger things have happened, but the best thing, the nicest thing would be to see this completely rip back into those 42s into the end of the week as equities catch a bid, and then getting a chance to resell that higher, because, you know, the global economy is not going to restart fully. You know, we're talking about 2021 or later. So that could be an interesting trade. But I think if you're long, you'll likely want to stick with the longs. This is clearly not a place to get short crude, right? So with everything kind of being fixed, right, and pretty much everything playing out the way we discussed in the videos, what's next? I think the big question on a lot of people's mind is, well, why are equities not, I saw a lot of amateurs, in my opinion, talking about the jobs number or talking about PMI prints in Italy. I mean, here, let's be very clear. As far as I'm concerned, if you're talking about, oh my God, panic about job numbers, oh my God, panic because the PMIs are coming in ugly, you're either an amateur or you're looking for clickbait because you need to sell advertising revenue. It should be a surprise to freaking nobody that the job numbers are going to be horrible and that the PMI numbers are going to be horrible. You know, if the economy stops and nothing's happened, you know, even we got the 6.6 number in March, you know, that's not even taking everything into account. I wouldn't be surprised if ultimately we get something like a 12 million number, double what we saw last week. But even if we get 12 million, am I going to think panic? Oh my God, it's horrible? No, because that's exactly what I would be thinking. If the PMIs drop to all-time lows, if they go to zero for all I care, you know, I'm not just to stress the point is it's nothing new, right? It's to be expected. So here, I think the message and what the market is telling you is and we mentioned this in these videos this week, right? Look at what happened. We had 3 jobs number in a row where the number came out, right? Double or more of the forecast. And what did the market do? The market did absolutely nothing, right? The market did absolutely nothing. It kept on holding It kept on holding above this 124. And you have to pay attention to that. And every time that happened, it was an opportunity to get long or to nibble to the long side. So the market is speaking for those of you who are ready to listen. And hopefully those of you who are following the videos and are listening, is the market is saying, I have priced in an ugly situation here. I've priced in basically Q1, Q2 earnings chucked out the window. I've priced in jobless number going to, jobless rate going to double digits or higher. I've priced in airline traffic just going to minus 90%, 90% of what it was, 90% less. I've priced in occupancy of hotels being 90% less. I priced in Airbnb guys going bust, right? It's no surprise. So here, for the market to go lower, you need to have something really drastic and ugly happen. So for example, you see the numbers in Italy, they're slowly coming down, right? Back, I think today, the number of deaths was like 500 coming down from a whole series of 900. If we get a day where the Italy deaths has gone from 900, 900, 800, 500, now tomorrow we see them going to 1,500 or 2,000, then the market's going to shit a brick, right? You see these cases are kind of going down in New York. If all of a sudden one day you get like 4 times number in New York or even double, right? Then market's going to have to notice. But right now, the market is pricing in, as far as I'm concerned, everybody's quarantined. Everybody's going to stay home for a couple of months at least. Schools are not going to open this year. Kids are going to go back to school in September, etc. So it needs to wake up to a reality of something worse. And that's what the market is telling us. So that's why you're seeing ES sold at that 200 on the weekly, but it can't trade back below that 2400, right? If you look at it on the daily, it's still trading around that 10-day moving average. And we said, as far as we're concerned, as long as it can't trade back, close below there and get traction below the 2400, we would be buyers, even though the situation is ugly or likely going to get uglier. You have to listen to price. So as long as that doesn't happen, our base case is still that the market is going to give this a stab, possibly this a stab, right? If you look at the NQ, similar thing. If you look at it on the weekly, right, it's holding the 200. They're selling the 100, but weak, but it's not really moving. Look at it on the daily. It's exactly the same thing. It can't get any sustained traction below that 7,500 and below that 10-day moving average. So there are buyers there, right? The sellers can't attract new sellers, so you have to pay attention to that action. Now, it doesn't mean it can't go lower, right? It doesn't mean it can't go lower, but I'm going to say the same thing I said last week. Unless you get a daily close below that 10-day moving average, unless you get market closing below that 7,500, that 2,400, the base case expectation is that we still have to surprise to the upside, because for now, everything is priced in. And as crazy and as kooky as it may seem, you cannot discard the notion or the possibility that things just get better and everything's priced in and we get a strong low, right? Could the low be in? Sure. If they find a cure tomorrow, we could go back up. That's not the base case scenario, because before we get some kind of cure, it's going to be in 2021. A vaccine will probably have a complete rewrite, and we'll talk about these and more, about social code or about how we're living, how our lives are going to be run. But I think here, again, it's a very distinct possibility that unless we can trade below these numbers, the short-term low is still in. We trade back closer to those 200-day moving averages, and then we stay broadly stuck in a range until we get new information, right? Until we get new information, the market can decide what to do. So I think those are what the interesting charts are, essentially very close to what we saw last week. Is not an awful lot has changed. The other thing I wanted to discuss is also, you see how pure these trades are? We discussed these like these wedge breaks here on cable. So we don't know what's going to happen. Our base case is we're bearish cable because of a lot of things. I'm not going to go through the discussion again. But again, see, breaks down, you sell the move back into there, and then we're back done. TP1 done, TP2 done for the first previous support zone. And let's see what it does today. This trade is still in play for a move back here. For those of you who are want to run runners here, remember the 120 is the key pivotal level. Now we'll have to see how the market reacts to the news that Bojo's been admitted to hospital. But again, forget the noise, stick to the levels. The levels are guiding you, right? And as far as the other charts are concerned, there's nothing huge that's happened, right? The only thing is, again, you're seeing crude is popping up. And as we said, as long as the squeezes go, it'll likely come up and try and take all these levels to go for the gap fill. Now here on any panic into the open, I just can't see how they're going to let it die again before this OPEC meeting later on in the week. So I suspect any dip is going to continue to stay bought, and at the very least, they'll keep it pinned around this 27, 28 as we go into the meeting. If not, they'll try to get it grind higher. If we get a stupid move higher, then maybe it's going to be a nice sale. Okay, that's pretty much where I'm looking for. Wishing everybody an awesome week ahead. Let's see what we get, and let me know if there's anything specific you want me to cover. Take care, guys. Bye-bye.